Evelyn, maybe you would like
Yeah.
to do the summary on your side.
Okay, yes. Let me just put it in the summary. Number one is that as correlated to PC studies, there will definitely be a reset. There will definitely be a reset in the financial system. Okay, either it will be fast or it will be slow, because chances that if a clash, then it will be a fast. Rules, regulations are being challenged. That means government are being challenged, and there will be instability that people needs to hold on to their faith, even we ourselves as well. And really what the world needs now is really a good leader to help, to pray for a good tidings to come. If not, there will be a risk of crises, riots all over because of inflation, people going hungry, people then unemployment, then people, once all this kicks in, then there will be a lot of instability comes in as well.
Yep. So that's why I think in terms of the reset in the financial system, what to look out for will be the BRICS and the EU reserve currency. Okay. And the other thing, of course, the reset could be a reset in Fed's policy. Okay. Because suddenly things are so bad that the Fed will actually do a U-turn. Hey, let's do a reset on our policy. We will not, we will stop raising interest rate. We would stop QT and observe where the economy will be over the next few months before seeing any other needs to whether to raise or to cut interest rate. So that could be also a reset of the Fed's policy. And the other thing is that, of course, as I mentioned, the international rules-based order is being challenged. Okay, and then it's challenged not only by China, but a host of countries that have been the receiving end of US dollar hegemony. Okay, and the other thing is that China's red line is also being challenged by the US. So this is a two-way process. Okay, but I think one of the thing that could be a major challenge would be in the challenge of the people against their own local governments. Okay, and we can see an expansion of riots, demonstration, enough to bring governments down. Okay, and this could expand further into other countries, especially emerging markets. Economies are very vulnerable because of their dependence on energy and the rising inflation. And of course, mounting economic crisis will be the main feature. Okay, and economic crisis will not just be in emerging markets, but also in the developed nations as well. Although emerging market economies has a higher risk of collapse. So all these are coming to a head over in the next few months, and some particular ones we will see whether the extent of what will happen in July towards the middle of August. We will see what will happen over the next few months. Yeah. So Q&A, anyone have any questions?
Oh yes, PC, I wanted to ask regarding US dollars.
Yeah.
Okay, well, how long do you think it will sustain that at this exchange rate of high US dollars? Because even the economy is down, but their rate of exchange is quite strong. I don't really mind, because I also earn some US dollars from my courses.
I think the US dollar days are numbered. Okay, but then we have to measure how it is now. For example, people say US dollar is strong. Okay, but the strongest currency this year is actually the Russian ruble. Okay, which has appreciated more than, I think, about 20% versus the US dollar pre-war. Okay, Ukraine. So at the end of the day, if we want to measure the strength of the US dollar, when you measure with other currencies, it's like all the currencies here are actually unbacked. They are just fiat currency. It's just that the US is the cleanest shirt in the rubbish dump. But if let's say we were to measure against commodities, then any weakness, okay, due to the Fed's reversal of policy would actually bring the US dollar down, but also would bring up the price of commodities. So actually much depends on the Federal Reserve action. Now, the Federal Reserve cannot keep raising interest rate because of the US total debt. Total debt in US is more than 90 trillion, which is more than 3 times its GDP. That includes corporate debt, includes household debt, and government debt. Now, if we measure, for US, they have the Social Security as well as Medicaid, which they actually help subsidize, okay, medical for retirees and people of such status. They also have Social Security, which very much like our EPF. They actually have zero funding. That is why the unfunded liabilities of US in Social Security, okay, and in the Medicaid is easily about $200 trillion. So that is why the total US debt plus unfunded liabilities as a percentage of GDP is actually more than 1,000%. So that is why there is a certain limit which the Fed can raise interest rate, because if they continue to do so, they will not only implode the entire debt market, but they will also implode the pension system. Now, most of the US pension, whether it's through corporations also have their own pension plans, okay? Now, most of the pension plans in the US are underfunded by about 30 to 50%, which means that, sooner or later, they run out of funds to keep paying the pensioners. And that, because of that, previously they used to invest in government bonds. When government bonds were actually 6 or 7%, 8%, then they are able to continue to see their funds being replenished, okay? But with government bonds right now at 2%, 2%, they cannot get the replenishment that they want. And what these pension funds did was that they invested the bulk of their funds into the stock market. So if the Fed continue to increase interest rate and the stock market collapse, although the stock market may have gone up, okay, since 2008, may have gone up by a few 100%. Let's say the S&P 600 to, let's say, 3,600, that's about 600%, 700% for that matter, have gone up 700%. But a collapse of the stock market by 50%, that means that, these pension funds could be in trouble, which means that the previous gain, okay, from 600 points to 4,200 points, if 4,200 points collapse 50%, that means it's down to 2,100 points. That means that a huge bulk of their funds have been wiped off, okay? And if let's say this is being wiped off, okay, then they will actually have a funding crisis, okay? Because suddenly, they do not have sufficient funds to continue paying their people, especially in a deteriorating economy. They also do not have the funds, okay, that people contribute, because people will be laid off.
Yeah, because the baby boomers are the
Yeah.
majority of the population
Yes,
now.
you're
That's
correct.
right. Yes.
Yes.
Oh, I can imagine.
Yes. The
It's
baby
not
boomers started retiring about
around
5
this time.
years ago.
Yeah.
Started 5 years ago, but the bulk of it will be over these few years that will demand their pensions. So the biggest bulk, because the baby boomers lasted about post-World War all the way to about 1960s.
I
So
think
about,
late 60s. Yeah, I'm also in the baby boomers
about 20 years.
rank. Yeah.
Yeah, about 20 years. So which means the baby boomers started retiring last 5 years. So that means the bulk of it will be the coming 10 years, you know. So these 10 years, if they have insufficient funding, then the pension funds would collapse. And that is why the Fed cannot continue raising interest rate. So at some point in time, the Fed will have to say, you know, we can't do it anymore. Then they have to pump liquidity into the market, start QE and all those. Now, when that happens, the US dollar will continue to deteriorate, inflation to move up.
Oh, I think we lost PC for a while. His line is not very stable since this morning, so bear with us for the time being. Oh. Oh, I think, hello. He's just dropped off. Let me just call him and see what he wants to do. He's back again. We cannot hear you, PC. Y'all can hear PC or not?
Can you hear me now?
Can.
Yeah. So although although I say that I don't give advice on stocks and all those, but I think one of the if you are interested in investing, I think one of the better ones would be in the uranium market. Yeah, because of the energy crisis. And if let's say should anything happen to the price of oil that it suddenly skyrockets, then I think the uranium market would actually take off. Because uranium, if we want to calculate in terms of energy output, one pound of uranium can provide more energy, you know, than, you know, for example, you know, acres of solar panels and things like that. So that's why, you know, in an energy crisis, uranium would be one of the better beneficiaries. Although oil will also actually oil would actually perform well in this scenario. So
maybe we will.
That's why.
Go ahead.
Yeah, go ahead.
Yeah. Actually, this is also in line with the next period. Maybe we can have a series of talk on, you know, what will happen in the next 20 years and what is the best sectors that, you know, will boom in the next 20 years to help our audience here to make their investment decision for the future. So we can hold that series of the talk as well. And uranium is definitely a good choice. Anything that deals with chemical energy is one of the trends that I'm also looking into in the next 20 years.
Yeah, for example, there's going to be 330 nuclear plants being built all the way until 2050, if I'm not wrong. And based on current uranium supply, that's not even enough to support new nuclear plants coming in at the end of 2025. So that means that there's more intensive development being needed. Okay, so you know, if you are interested, then you have to adapt a very long-term view. Okay, that uranium cycle is high, you know, up and down. Okay, there's one company which I own. I bought at less than 50 cents, shot up to $1.50, then it dropped back down to 70 cents. Okay, but I still have not sold because I'm not really a trader. Okay, but I'm taking a very long-term view of how uranium would be. China itself will be building about 150 nuclear reactors over until 2035. So you need to have patience if you are in that sector. And that's why I think commodity cycle is still intact, because once the US dollar weaken, then there'll be a lot of opportunity to go into the commodities related stocks. But at the end of the day, I think we need to be also aware of certain geopolitical risks, because if as and when any war breaks out, then I think the stock market will be very volatile in that sense. Okay, first reaction is to sell. Okay.
Yeah, we have a question from Ivan Tan.
Yeah.
Can the Fed increase interest rate and do the QE instead of QT at the same time?
I think the ECB has proven that they can, because the ECB said that we will hike interest rate, 50 basis point, but we will do QT to help Italy. Okay, so actually it doesn't really make sense. It's just like, put the left hand money put in the right pocket only. So the Fed will say a lot of things, like they say we will do QT, okay, but it's actually doing QE indirectly, or slowing down the QT process, because they're pumping liquidity into the reverse repo market. Okay, and the Fed will also say that we have increased interest rate, but then the economy need support, so they may do selective type of QE. Okay, I think the Fed definitely can do both, but for better effect, they have to be very singular in their objective. For example, if I want to help the economy, I will do QE and I will cut interest rate. But if the Fed want to do this, which means it's trying to get political mileage, or reassuring the investment community that we are fighting inflation, but behind it, they will actually do QE to actually help the liquidity situation, which means they might want to increase their reverse repo, let's say 2 trillion to 3 trillion, to continue to put liquidity into the market. So that's one thing that they can do, because but right now the QT has not really taken off. It's just a little bit over 10 billion, might as well, it's nothing significant at all. So if, let's say, one of the key things is like, you can go to the NY Fed reverse repo. There's a dashboard there which you can actually see the daily reverse repo. So if, let's say, the daily reverse repo keeps on hiking up, okay, keeps on moving up while the Fed has already hiked interest rate, it goes to show continual liquidity problem within the financial system. Then that's one way that the Fed can do it. Yeah.
Okay. Yeah. Any more questions from the floor?
I think silver is the most undervalued commodity right now. If we want to follow the development of silver reached a high of close to $50 in 1980. Now, according to some analysts, adjusted for inflation of over 40 years, silver should be closer to about $250 to $300. That is according to the Fed's current inflation. Inflationary calculation, which puts today inflation at 17%. Then according to the same metrics of inflation, then silver should be closer to about $800 per ounce. So why is silver not taking off? Because silver is the Achilles heel of the entire financial system, because silver is often referred to the poor man's gold, and silver has been money for a lot of people all through thousands of years. Okay, and that is why they want to suppress the price of silver. Now, what's happening right now? The US actually have the COMEX to suppress the price of precious metals. Okay, And the COMEX have been very active all through the years to suppress the price of gold and silver because they want to prevent people from using real money as a store value of their wealth.
Actually, precious metal will not really do quite well this year because this year also the chart is also quite does not have much of a metal in the this one. That's why it started strong beginning of the year and then after that it deteriorates. So if from the 5 element standpoint, metal might not do so well in the next half of the year.
I think what is important is that the COMEX consists of the bullion banks. Now, the bullion banks are the ones that suppress the price of silver through silver derivatives. So what is happening is that from a long-standing point of being net short, they are now net long. So which means that when they are net long, it goes to show that they are adopting a very bullish stance, okay? Even the producers are cutting their hedging. Now, producers normally hedge the price of silver in case the price of silver fall. But right now, because price of silver has fallen, while they actually had their hedging when silver was in the $20 plus, they are now taking profit from their hedging and they are actually exiting their hedging. So that goes to show the producers are also bullish on silver. But whether silver will take off or not will take some time because out of the 10 or so bullion banks, 3 of them are heavily short in silver. If I can recall correctly, is Standard Chartered, Citibank, and Bank of America. In fact, Bank of America's silver short is estimated to be about 600 million ounce, which is 2/3 of the global production. So that's why even though bullion banks are net long, there are a lot of short position as well from the few banks. So which means that seven or so of the bullion banks are trading against the 3. And that's why the 3 are trying to suppress the price of silver so that they can exit their short. Now, the price of silver will really start to move up when the EV market moves up, because silver is needed in electrical vehicles. In fact, silver is needed in all electronic devices. Okay.
Silver is needed also in solar panel.
Yes, in solar panels. Yeah. So that is how important silver is. And that is why, the bullion banks want to suppress the price of silver because they're vested interest with the electronics companies. Because if the price of silver is low, that means that their production expenses will also be down. But I think, as the global community energized electrically, then the demand for silver will actually move up. And in that scenario, not only silver, okay, we will see copper. Because of electrification of infrastructure, copper will also move up, silver will also move up. What about gold? I can't tell you the price of gold, but I can tell you that the bullion banks have cut short their net short position in this year by 153,000 contracts. That means that they are wanting to quickly exit their short contracts because of some event in the near future. Now, what is that event? Well, a lot of the central banks are using this opportunity to buy gold as their, to add to their reserves, because they worry about if there's a collapse in the debt-based monetary system, the only way that they can recapitalize the banks, the central banks, would be by hiking the price of gold so that, what is bad is turned good, okay, by pushing the price of gold up. Now, there is some event that will happen that will involve gold, because last year, the Bank of International Settlement set gold as a tier 1 asset. Previously, it was treated as a commodity, okay? Now, the other thing is that the new EU plus China development of a commodities-backed currency, it was reported by insiders that are providing liquidity to the gold market, okay, in London, that they part of the three commodities that is considered will be oil, gold, and silver. Okay, so that means that they want to back this back the reserve currency of the EU with these three major components, but there will be other components as well, because there will be copper, and I believe that there could be major metals like maybe iron and such, where or even natural gas, because Russia has the most of all this. So whatever that is being developed will be beneficial to what Russia, China, and the Central Asia economies has. Okay, for example, it might even involve uranium, because Kazakhstan, Russia are the major producers of uranium. Okay, and China, okay, is one of the top few producers of silver. China is the world's largest producer of gold. Russia is number 2. So that's why I think that central banks are very worried, and therefore the bullion banks are being used as a manner to suppress the price of gold, to allow central banks to keep on buying gold, okay, in preparation for some event in the future. Now, how high the price of gold would be actually depends on what percentage are they willing to back the debt-based monetary system with. According to some economists, in order to, let's say, back 10% of global debt with gold, okay, then gold could be already closer to $10,000 per ounce. And if, let's say, were to back total global debt with gold, that would entail gold being $100,000, closer to $100,000 per ounce. So actually, it's dependent on how bad the financial situation is and how they want to recapitalize it using their using the gold reserves. But I, for one, think that eventually they would want to shift over to a digital currency. Okay, what the international banking system will look like in the future will be a shift into digital currency.
Cryptocurrency.
Yeah, whereby it could be backing with gold. Okay, so that could be how the development would be. But of course, if, let's say, the central banks develop their own cryptocurrency, people would still prefer the cryptocurrency that is outside of the government control, which means that if, let's say, they develop the cryptocurrency, then I think there would be a revival for Bitcoin, okay, where it might also introduce new cryptocurrencies that are being backed by gold, because right now people have learned that the whole cryptocurrency market collapsed because of token-based exchange system that back their holdings with Bitcoin or other digital currencies, so other cryptocurrencies. So this has gone to be shown. This has shown to be a failure, because when a system becomes highly leveraged, okay, like in the token exchanges, there won't be enough Bitcoin to actually support the system because of the leveraged nature of it. So, and because if, let's say, the token collapse, it will drag also Bitcoin. So that's why I think that in the future we might see some of the cryptocurrencies being backed physically by some assets. Okay, at least it shows a sense of stability, and that would perhaps be a more mature development of the cryptocurrency market. Already there's one particular cryptocurrency that is backed fully by gold. Okay, that people can use that digital currency, based on their storage of gold, and they can, because they also earn interest from that storage in gold. So, this kind of system will continue to be developed, and gradually, I don't think it's the end of cryptocurrencies, because
Oh
technology
no,
will always
it
evolve.
is the
So,
beginning. Actually, it's the beginning. Next
yeah,
period is all about all this cryptocurrency one. Definitely, maybe we will do a talk on the next 20 years. Yes.
yeah. So because of this kind of development, therefore, especially when it involves crypto, it involves technology and all those. There's only one thing, electrification, becomes more intense. Okay, there'll be needs for more supercomputers to perform that kind of transactions using digital currencies. There'll be more demand from from the basic ingredients that make up the electrification of the infrastructure. That's why I think copper is the most understated commodity out there, because everything that we do require copper when it comes to electrification. Yeah, so that is why some people say that copper is actually the real gold in that sense. Yeah.
It's a very powerful conductor, actually. Copper is one
Yeah.
of the most powerful
Yeah.
conductor. Even in
Yeah.
feng shui, the feng shui master sometimes they have, when your house have negative energy sector, they will use copper to mitigate. But that actually is a scientific, reasons behind that. Why? Because copper is a very powerful conductor that will conduct away all those negative ion, those negative energy. So in
Yeah.
fact, all these, 5 elements, they're quite scientific. And then I think for Sally's question about gold, I don't think in short term, the prices of gold will go up for especially for this year, it looks like it, but it's a good commodity to hold. Okay, yeah, there should always be, some gold and silver. It cannot be, you cannot run out of, it cannot run out of trends. I would say that is something that evergreens.
I think much depends on how it will evolve. But I think the moment that the Fed pivot, there'll be some support for the commodities sector. But I think if you want to measure gold in terms of the kind of returns that you see in crypto, then I think it will not go into that extent, because gold and silver, perhaps not silver. Silver is a bit more, because it's 50% money, 50% industrial application. So there is some volatility there. But where gold is concerned, I think gold will always be a protector of wealth. Okay. So if you look at the price chart of oil, okay, for over, I think the last time I seen a chart was multi-decades chart. It shows the volatility in the price of oil, okay, in terms of US dollar. But in terms of gold, it is actually pretty stable. So that's what gold is. Okay, for example, if you look at the gold has very long-term kind of effect, I would say. If you look back to the year 2000, from the year 2000 till now, gold has been the best performer. Okay, by rising a few 100%, from about $200 right now to about 1,007, is about 800 over percent. Okay, versus the S&P, versus the Dow, and I think versus even the Nasdaq, because the Nasdaq has fallen quite drastically. So that is the power of gold, in the sense that it protects your wealth despite all the volatility. And but if you want to make money, okay, then you have to go on speculative ventures, whether investing in the stock market, okay, or investing in if you can accept the kind of nightmarish volatility, for that matter, cryptocurrencies. Okay, for me, most of my investment are in the commodity sector, especially gold, silver, and copper, and uranium. Okay. I bought many of my of the company's shares in this sector. I also invest substantially in the Chinese tech sector. Okay, because I think that's the most is a dark horse in the making. And I do invest a certain portion in cryptocurrencies, although not very actively. Okay, I just leave it there. Some I put it on a stake that earn about 5% interest a year. So just leave it there. You know, I don't speculate much. Okay.
Yeah, I
Meaning
think
is it the time? Yeah,
yes, you
yeah.
can consider cryptocurrency. I have a YouTube video made also on the next 20 years trends that talks about, what will be the trend, and also encouraging, you can pick up some cryptocurrency there. But the main one, you have to be careful because some are empty cryptocurrency. Maybe Bitcoin and Ethereum is the one that have already got application. It must be those that already have application. Like Ethereum is already in the MFT system. So it's something that is worthwhile to look into, like a small amount to diversify to be, more in line with what is installed in the next 20 years era. Actually, we are in a very major reset. That's why all these chaotic things coming in now. And 2024, we will be set our foot into a new era already.
Yeah, I think that a lot of all these, well, as XRP, I don't invest in XRP because um although there are a lot of talks that SRP is worried because it will be
The next Bitcoin.
not the next Bitcoin, because it is its application is being considered by banking institutions.
Oh, okay, no wonder.
So if let's say the banks start their own digital currency, then it will there were reports that it will be based on the XRP platform. So that is why there is high speculation on XRP as well. For me, my biggest investment in, as a speculative asset, not investment advice, just sharing for knowledge purposes. My biggest actually is in Cardano. Okay. Why Cardano? Because it is an offshoot by the co-creator of Ethereum, and he has a very ideal vision for Cardano. And although right now they have very little applications like Ethereum, but the number of companies that are interested, to be, to go on their platform is also pretty huge. So of course, I think what they are exploring is closing all the loopholes in it that the co-creator found in Ethereum, and Cardano is right now very actively involved in the development of the digital sector in Africa continent. So assuming if they are successful there, then I think Africa will be one of the fastest growing continent in terms of population, and over the coming years would be in economy as well. So that's my reason for in Cardano, but I do own a bit of Ethereum, a bit of Bitcoin, a bit of Litecoin,
Okay.
And some applications that are already in use. For example, in VE chain, which is being used by the Louis Vuitton for using blockchain to encrypt their product quality. Okay, but VE chain is something that I just throw money because it's being used by Salesforce, Louis Vuitton, LVMH. Okay, but it doesn't move anywhere. Okay, so just sometimes you see certain applications being used in in real life by companies, so just put some money there, but so far it's not moving. But you need to be very selective for sure.
I also I'm quite conservative. I only keep it to the main one like Bitcoin and Ethereum, which already has the application. And for the questions, I'm not really a financial advisor, but at this point, at this price of Bitcoin, maybe it's good also to pick up some lah. That is just like a very small advice. You can always go back to my YouTube channel. Maybe we will put it in the link here. I will put it in the link, and then you can always check that video on the next 20 years, what the trend will be like. And maybe we can have a talk in the future to cover this topic as well on the future of what the world will be like, that were leading to what is good for the park as a growing investment, a growth investment.
Yeah. So any other questions?
I hope that y'all can share with the friends about all this, this talk with all your friends to get more people to attend.
Yeah, because we are doing this out of interest. Since we are not charging, we are also hoping that you can actually like and share our YouTube videos so that more people are also aware and help our channel to grow. Okay, that's one of our intention, is to show that there's other alternatives to I think with Evelyn knowledge and my understanding of global events, then we can actually merge to maybe give an indication of what is to come. Yeah.
Okay, this one is my channel. I will drop PC's channel also into today's talk. Will also be, once we have edited, it will also be in the channel, in both PC and my channel, but I will sort of do it differently a bit from PC. Okay, hold on for a while. Let me just grab the link from PC. And you can also go and like, go and support. Why am I just... bear with me. Okay, this is PC's channel. And next 20 years is going to be quite challenging. So you need to have either a support in terms of, a lot of research knowledge, and also in terms of some Chinese metaphysics or astrology that can predict the future trend concurrently to help you to navigate the next 20 years. And also maybe, there's also a lot of people that putting up, mindset sharing, like the Silva method and all these things. So these are all the tools that will help you to navigate and be above normal people in the next 20 years.
Yeah. The major takeaway I got from De Silva is, I always remember, nothing is the space for everything.
And they are also quite spiritual in a way. Yeah, De Silva is a mind tapping method. And in Chinese metaphysics, we also have these techniques called, mind tapping. But if I were to couple De Silva methods with Chinese metaphysics techniques of tapping into certain directions energy, it will be even more powerful. And anyway, that one reserved for the future. Okay.
Yeah. So when is our next session?
The next session will be next month. Maybe end of next month, 4 weeks from now.
Okay.
Yeah.
All right. So I wait for your date. Okay. Then we'll have the next session. This will be ongoing every month. Yeah. And we'll add things as and when we see fit.
Yes, that's right. And then the next session we will now have a talk about what the next month will come, and also a little bit about futures, about the next 20 years era as well, the reset.
Okay.
Yeah.
Well, thank you everyone
thanks.
who logged in. Thank you, Evelyn. Okay, have a nice day.
Thanks, PC.
Bye-bye.
Thank you everyone for listening to this talk. Okay, hope to see y'all in the future. Bye-bye.
Okay, bye-bye.